They call whole life.
Whole life.
Whole life. You know why they call it whole life?
Why they call it whole life?
Think about it. You pay for it your whole life. It never runs out. As long as you pay the premium,
you got it.
You got it. So it's much more the wiser choice for the consumer, whole life, but then there's different types of whole life. For example, whole life has what they call cash value. This is universal life, by the way.
Yeah.
So it's a combination between a whole life and a term. In other words, it doesn't run out. Sometimes it's not as expensive depending, but there's a little bit of cash value. If you miss a day paying the policy from laid off from work, some of that money that you've been putting in the policy, it'll carry the policy until that money runs out.
That's what I've been reading this book regarding whole life insurance and how it works and how rich families back in the days. It's the Rockefeller way.
Yeah.
And it talks about that. That's kind of what got me wanting to do this podcast with you is I'm learning about life insurance and how important it is. And I was talking to people at work and saying that I didn't know these things, right? I knew, I got term, but I didn't know what came along with the whole life, and I should have got whole life for my kids, because you could use that cash value for something. From what I read, and then there's a person at work who, when they got laid off, she survived off that. Her family survived off the whole life until she was able to get back on her feet. And then she still pays into the premium. She goes, it's still good. Right. I didn't have to pay the money back. She goes, but it's not, at least in the book it says they don't recommend you not pay the money back because you're just paying yourself and you're funding your whole life insurance.
Well, she doesn't realize that money...
It's going to be at the end. It's taken off.
Well, that's right. That too, and that money that she took was her money anyway.
Yeah, that's what
she
said.
overpaid in the policy, and they all work their way. Look, insurance companies are not here to glorify you. They're not here to say you're such a nice guy. I just want to make sure, and lady, that you have. Excuse me, all the insurance owners out there, but we're gonna be honest, right?
Yeah.
But you have to have the mind of understanding how it works. Okay. And it's not that complicated when you realize that, hey, you pay a premium, it's going to pay the life insurance, and then there's some additional thing called cash value. Guess what? In this whole life, let's say for $100,000 for Khalil, on the term he's paying $12 a month, and this he'll be paying like $62 a month. Okay. So he's overpaying about $45 for the same amount of coverage of $100,000. So that $40 a month adds up over 12-month period, right?
Yes.
So he should be able to go back in his whole life policy and say, well, I need $80.
Yeah.
Well, it's not there because it takes 3 years for it to accumulate.
Yeah.
He better off taking that money to Bank of America and just get term. But then when he starts to age into a relationship, into a marriage, into equity and property and things of that nature, then we need to go to whole life.